All right, just a quick look at what has progressed into the weekend. In my last video, previous video, I said I didn't think gold was going to be able to break through this resistance on the first try. It didn't. We got to, had to back off and take another run at it. And I noted in my last video there was still a lot of resistance between, let's call it 1350, and I think the baby bull high was 1377. So buying a breakout above 1350 probably wasn't going to be a great strategy. And we were just moving into an area of even stronger resistance. And I didn't really think we were going to go through that resistance level, not on the first try. And that looks like that's what happened here. We kind of got right back into that 1360 area, and gold has, got a reversal candle. This is coming late in the daily cycle. The dollar rallied pretty strongly on Friday, so it may be that gold is ready to move down for a week or so into a daily cycle low, and then maybe we can try again on to break through this stronger resistance zone here between 1350 and let's just call it 1380. A lot of it, I think, is going to depend on the dollar. As I've been saying for months and months, the ECB is trying to um, weaken the euro against the dollar. So it's we just don't get much follow through to the downside when the dollar tries to roll over into an ICL. The move gets aborted pretty quickly before it really gets any downward momentum. And if the ECB has stopped the ICL in the dollar, then that could make it a little tougher for gold to get through this resistance level. So possibility here that we put in an intermediate or a daily cycle top, and we may have to correct for a week or so. All right, moving on to stocks. All right, so as you can see here, the initial thrust out of what I believe is an intermediate cycle low. We've kind of run into resistance here at 2,900. You can see this was a resistance back here, and then it acted as support, and so we've got some resistance here. We're moving into the FOMC meeting. The market, I think, wants to hear the Fed. They want to hear some dovish talk from the Fed, and I think traders just aren't ready to push through this resistance until the Fed confirms what traders want to hear. They want to hear that there's probably a rate cut coming maybe in July. As of Friday anyway, the odds of a rate cut in July were starting to become pretty high. And I think the market wants to hear that in order to get through this resistance zone here at 2,900. Now, I want to take a step back and look at the longer term charts. All right, so, as I've said in most of my other videos, I think, I see a lot of people that think this is a topping pattern, but I don't think it is. I think this is a sideways consolidation, very similar to what happened here over a year and a half, almost 2 years, that allows the moving average, long-term moving averages, some time to catch up to price. And you can see at each one of these tops, we're still stretched a long ways above this 200-week moving average here and here. And I do think we're going to make all-time highs. I think it's possible we could even maybe test or marginally go above 3,000 during this intermediate cycle, but I question whether or not we are ready to just take off and not look back here. We're still a little stretched above this long-term moving average. We may have to, even if we do, make it to 3,000, I question as to whether or not we're not going to have another pullback into the fall and latter part of the year, very similar to how we had a pullback here in the end of the year, and just give this moving average some more time to work off these stretched levels. So that's my guess, is that I think we are going to make new highs. We might even go as high as 3,000 or maybe a marginal break above it. But I am leery that the same thing is going to happen in this intermediate cycle that happened here and here. And we get a marginal breakout right here above this. The retail traders get very bullish. They buy the breakout, and then we get a nasty correction. Same thing here. Get a marginal breakout above this. Retail traders again, they start to pile in on the breakout, and then we get another correction. And I question as to whether or not that may happen again a fourth time, um, just because I think we just may not be ready yet to take off and produce another big sustained trending move like this one. I think we might just have to do some more sideways work before we can do that. And we may need to improve the fundamentals a little bit. And by that, I mean, we may have to get some kind of resolution to the trade war. And it seems like China is just not really ready to negotiate. I think they're willing to hold out until the elections, hoping that maybe we get a Democratic president in that's going to take a softer approach. And if not, if Trump gets reelected, then they will be forced to make a deal. But for right now, I think that's my current strategy would be to probably look to sell a breakout to new highs, and especially anything that gets up to or maybe marginally above 3,000.